First of all, thank you everybody who's sacrificing their lunch for some good gyan that we are going to get from this panel. A very exemplary panel today. We've got Saurabh from Zaggle, we've got Ritesh from IME Bank Nepal, and we've got Hathi from OneCard. And we'll do the introductions first, and then we'll get into how we are witnessing a very dramatic shift in terms of how Indians consume credit, especially credit cards, credit lines that are coming along, and we'll have a good debate and discussion on that. But we'll first do a little bit of introductions. Saurabh.
Thanks. Hello, everyone. Hello. So my name is Saurabh Puri. I work with Zaggle as Chief Business Officer. Quick introduction of what Zaggle does. So we are basically into spend management solution for enterprises, largely mid-market and large enterprises. Before joining Zaggle, I was working with Kotak Mahindra Bank, and in my last assignment, I was heading the credit card business for Kotak.
Hello, thank you very much, Abhishek. Good afternoon and namaste for everyone. I'm Ritesh Lamichhane, and I'm currently heading the digital innovation and transformation vertical at Global IME Bank Limited, which is a licensed Class A commercial bank headquartered out in Kathmandu, Nepal. So I've been a banker all my life. I joined banking in year 2000 and have had the fortune of working in various verticals of banking. So it's just been a tad over 2 years that I've been entrusted with this responsibility of overseeing innovation and transformation at Global IME Bank. Thank you.
Yeah, hi. I'm Hari from the OneCard team. OneCard is a consumer platform which helps lenders, the credit card issuers, in terms of managing their entire customer life cycle and also ensures that on the consumer side, how the experiences for consumers for a credit product like a credit card can be enhanced.
Thank you. Hari, this is your second panel today, so we try to keep it discreet in terms of different learnings that we can take from you. But let's jump right in terms of how the Indian consumer is evolving. And there is, it's almost fair to say that Indian customer ko samajhna mushkil nahi, namumkin hai. And with so much innovation happening in this space, I want to kind of talk about how this panel has seen Indian consumers' behavior towards credit consumption changing. What are the kind of places where they spend? What are the kind of instruments that are being used? What are the kind of retention and repeat behaviors that are being driven by different kinds of instruments? So maybe we can talk with Hari in terms of, start with Hari in terms of how in the last few years while you built OneCard, how have you seen issuance and consumer behaviors changing?
Sure. I think being a fundamental product that bridges the gap between the means and the aspirations to the consumer as a credit product, but it is more connected to consumption of the customer, so directly related to the consuming patterns of the customer. Two trends that we see clearly is that it's moving more online, thanks to the visionary payments team at RBI way back in 2009 when we introduced the entire second factor authentication. Of course, there is more security in terms of confidence in terms of doing transactions, online transactions. Just that multiple form factors have evolved, but however, they see a lot of convergence towards the form factors. And the second thing that we see in terms of usage, the spend patterns of the customers have reflected their usage. While it was more on a discretionary side where they would spend for a travel being a larger portion about 10 years back. But today we see the essentials being the primary portion of usage on a credit card, which would end up being shopping, groceries, fuel, and these essential bill payments have emerged as larger methods in terms of customer spending patterns. But what we realized early on is, irrespective of that, two things that the customer would want. One is convenience and the second is control, right? So how is that the product can help in terms of providing convenience to the customer? So if you'd actually look at it to say, for a small ticket payment, even when we have UPI being a method of payment which which is easing this entire thing. How is that we can do the transaction without even needing to scan a QR? Would you be able to do a tap on your mobile because you carry your mobile all the time and not your card, right? So I think the convenience as an aspect has seen a lot of innovation in this space. And the second part is in terms of control. How is it the customers have a lot of trust in the product where they while friction can be reduced on convenience, but however customer would need control. A lot of control elements coming in the multiple forms, be it on the card, on the mobile, where they know if they do not want to do a transaction, they would be able to freeze the card and then ensure that they are in complete control of it.
Got it. And you touched a little bit about tap and pay. So I want to come to Saurabh in terms of how do you think all of these form factors are evolving from QR scan-based payments, tap and pay. Tokenization is still early days in the country. So give us a view on what you've seen in the past and where do you think this is going?
Well, just to add what Hari was saying, so I will link this up with two large events that happened. One obviously in India, that was India specific, and second obviously it was a world over phenomena. So the first event that happened was demonetization. I think that is where it all started in my view. The emergence of UPI happened because of demonetization, and obviously you have to give credit to players like Google Pay, Phone Pays and Paytms of the world. They actually democratized that entire product. So that is kind of triggered the entire habit change in the customer. And one more important aspect to this is obviously the acceptance side of it. The acceptance side of it is far more convenient when it comes to payment instrument like this. That also kind of accelerated the entire phenomena. Now, having said that, the COVID happened after that, and that's a world phenomena. That resulted in the kind of contactless payment. That phenomena kicked in along with the UPI, and obviously it also gave a lot of kicker to the UPI transaction. That contactless payment and tap and pay slowly and gradually started, taking pace. But if you have to compare it with the UPI, if you have to make a direct comparison, obviously the scales are very different for a simple reason. UPI is a pure payment product and credit card is a credit plus payment product. So obviously the scales have to be different. And as I said, the acceptance side of it needs to be far more innovative, cost effective, for the tap and pay product to become more ubiquitous. I think that is where probably the industry will eventually head. That's my belief. But these are the phenomena changes that is kind of triggering the behavior change what we see today in the payment space.
Got it. So convenience, control, the scale of acceptance are what are the driving factors for today's consumption patterns that we are seeing. Ritesh, how do you see that evolving in Nepal?
Okay. We're going to have to go back a little earlier, because if you see the evolution trend of the Nepal's financial market, the first credit card product that got introduced in Nepali market was during the early 1990s, when a couple of local banks actually introduced credit cards. That was later followed on by other card-related products such as debit card and so on and so forth. But still the penetration, if you look at the penetration of credit cards and debit cards to this day, the penetration is very less. So compared to that, 2016-17, a local fintech company introduced a fully interoperable domestic QR payment solution, and it got so much traction in so quick time. I mean, now the trend is shifting towards more and more consumers using having felt that comfort in using QR-related payments, and also with the advent of digital wallets and mobile banking applications introduced by banks such as Global IME and others in 2010 and 2011. So the trend is entirely shifted from cards to mobile and QR. The traction is way significant. Because you talk about the volumes that are being generated on a monthly basis. We're talking about almost close to 30 million transactions happening on QR payments. That's the transaction count. Whereas in mobile banking application, close to 50 million transactions are being processed on a monthly basis, and the transaction volume is almost close to 400 billion Nepali rupees. We also need to keep in mind the fact that our GDP is only $40 billion, and we have a total population size of around 30 million. Talking about the user base, in mobile banking, we've almost hit 26 million users.
Wow.
Whereas if you talk about the user base using credit cards, it's not even close to 300,000 users. So we see a clear shift from cards to mobile and QR, and it's going to grow bigger in the days to come.
Great. Thank you. I mean, sometimes when you have to put things in perspective in terms of number of users, population, etc., it starts to see how big the opportunity is still in front of you. And you cannot have a credit card discussion or a fintech discussion without kind of mentioning the role of the ecosystem and how bank fintech partnerships kind of come to maturity to start to create an impact in terms of distribution, risk management, etc. So, Saurabh, if I may start with you in terms of how are you at Zaggle and otherwise seeing the whole ecosystem come together to do, first of all, kind of larger B2B partnerships to increase distribution, and also the bank fintech relationship specifically to expand the pie on credit. We've seen that play out beautifully in terms of how FLDGs, etc., have helped the NBFCs grow consumer and SME lending when it comes to the loans product. We're not seeing that so much in credit cards yet, but I would love to kind of get your point of view on that.
Sure. So I think, incidentally, you have two good examples when it comes to fintech and bank partnership. One is on the B2C side, which OneCard is doing, and second is what we are doing in Zaggle. So today, we work with a very simple philosophy. So we have a software solution and we are into spend management. That's a core job. Now the payment aspect is deeply embedded into whatever solutions we have in the market today. It's a simple philosophy like that. So today, the partnership is that the bank becomes the issuer, we sell their credit cards or their products are deeply embedded into our software solution, and we reach out to our corporates and give this solution as a comprehensive solution. So this is the one kind of partnership what we are doing. Answering to your second question on the risk participation, that's one area. There are other areas also which OneCard is already doing. I think credit card as a service is something which fintechs can play a very, very important role there. Today, banks do work with a concept of ROTI, return on time invested. And many at times they are blindsided on these small aspects, which, fintechs can jolly well chip in and create a lot of value there. So that's another aspect which is like other than the credit aspect. Credit buy-in, RBI has his own way of looking at things. It has allowed FLDG on other products. Credit card in RBI's mind otherwise also is a fairly risky product. Obviously, they are also trading with a little bit of caution on this. But I do see a lot of merit in this kind of participation. Fintechs can play a very, very pivotal role in this. There will always be segments where the information what you gather from the customers with your set of products is going to be different from how the information is gathered when you are selling a banking product. And that can help in creating a lot of credit models, which otherwise today it is difficult for the banks to create. So the banking model is largely around what is the bank transaction happening, how the customer is behaving in bank ecosystem. But there are data points beyond that. So that is where I feel that, and credit is all about how much information you can get about the customer, right? So all those information is what we can gather. We can create credit models and help banks to expand and get into a partnership model on this.
You used a term called ROTI. What is that?
Return on time invested. I think that's more of a banker's term, I guess.
Time invested in a particular partnership?
So, no. So many at times what you will see is in banking also there are a lot of products where banks have not scaled up. Okay, let me just take very crude examples here. Like say for example, when FASTag came, banks were not the first ones to jump onto the opportunity because they thought that the time invested on this is way too much against the return what you're going to get. Similarly, if you talk about even the UPI, the entire architecture is built by banks, but to market it, to sell in the or to popularize this, obviously there were fintechs who came forward and actually scaled up this entire thing. So that concept in a banker's mind will always play because end of the day there are core banking things which they are focused on.
So it has to be kind of big enough for them to get interested in terms of the return on the time that they're investing. Great. I learned a new term today. Hari, one of the other things that Saurabh mentioned was around credit card as a service model and then the FLDG and loss back, guarantee back models. Educate us a little bit about how your journey has kind of been around building or such kind of partnerships with banks, and where do you think this is going?
So 6 years back, when we started thinking about it, meaning all of us have been from banks, so we understand the entire way we operate. All that we wanted to think is what would the customer want, right? We were thinking there was a plethora of cards available to the customer, so the customer would find it difficult to choose the product. How is that we will make the choice more simpler for the customer, right? So why would a customer take multiple co-brand cards while they can get the benefits out of on one single card, right? And the second thing, to avoid the customer the hassles in terms of transactions, we had to rethink the transaction grounds up, right? So most of the system, when you do a transaction to it, you would get an OTP immediately, you would get a transaction confirmation, but would you be able to see the transaction on your mobile, which was becoming the primary mode of customer review, right? So we started building our systems grounds up, thinking that most of this have to be real time to the customer, and how is that the customer can take action real time as well. So if you do a transaction now, does that immediately show up on your app, and then is it also giving you a facility to either block or to convert the transaction into EMI then and there, are all options of both control and convenience. These are the two aspects that I spoke about, right? So I think while we have the entire ecosystem available, rethinking that from grounds up point of view gave us the benefit of defining mobile first product and creating platforms that will support this transaction, right? So let's assume that you would travel into an international geography, and when you do transaction using a credit card, you would immediately get a call from the banks to just reconfirm whether you have done this transaction, right? So we just rethought about it to say that, yeah, there needs to be an additional layer of verification to the customer. It need not be a call, right? So whenever this transaction happens, what is the most authenticated channel that we have for the customer is the app. On the mobile app, the customer gives an authentication to log in, right? Similarly, for a transaction, right, with the basic risk rule, we would have declined a transaction. How is that we can ask the customer to pre-authorize it and do it in the next 15 minutes? And for just to give this experience, a lot of back-end systems have to come together to provide this experience to the customer. And that's where we said that there's a front end, which is the app, and there's a back end, which is the card management system or a risk management system and an experience system and a loyalty or rewards management system. How is that we will be able to give this as an integrated solution was our thought when we started pitching it. Right. Of course, banks bring in the entire strength in terms of risk management and funds management, bring in the experience that the customer can get and the control and convenience that can be offered on the platform.
Got it. And I want to kind of jump slightly into how the economics of this business is evolving. There is, when you look at the line items of a credit card portfolio, there's right from the cost of funds to cost of acquisition to rewards cost, NPAs, MDR. Almost each one of these line items is going through a little bit of shift. Maybe we can spend a couple of minutes talking about where do you think key aspects like the MDR is going with UPI coming into the play and with a very weighted average model of what the landed interchange will be. It would be good to kind of talk about where do you think this is going, and are there alternate revenue models that are emerging from this new economics? And we can probably start with Saurabh and then...
Sure. No, you're right. Actually, if you have to look at the economics, especially after COVID, there are certain aspects which are definitely undergoing change. One obviously is the interchange realization. I think that is something which is definitely, we can see the shift in that. So maybe 20-30 bips is lower than what we used to get pre-COVID. The second phenomena that is happening is on the revolver rate side of it. Now the revolver percentage is also coming down, but that's more on the retail revolver part of it, which is the organic revolve we talk about typically. Having said that, the EMI as a book is also going up. So that's another shift that is happening. So these are the changes which typically is happening on the revenue side of it. Now, obviously, this puts some bit of pressure on the overall equation, the economics. But that's the world order change you have to accept, because if these are the changes happening on the revenue side, there are other things also happening on the cost side. You're also getting a lot of efficiency. Today, the cost of acquisition is well contained, so the new models are emerging. The digital way of, onboarding customers are also reducing cost. So there are certain efficiency which you're drawing out of that. Now, revolver rate coming down, the conventional wisdom is that your portfolio is also soothing, but the data currently is not suggesting, so I will not comment on that. But that's also the choice you make. I think my personal take is that a lot of issuers went a little overboard acquiring customers. Maybe that's a phenomena that's working. But if your risk model is in place, with this kind of phenomena happening on the portfolio side, it kind of soothes the portfolio in a longer run. And this equation will change. I think it's bound to happen. No one can help that. But having said that, we are also seeing a lot of efficiency on the cost side of it. In terms of additional revenue line, I think since we picked up the concept of card as a service, so there could be certain services which you can always have a subscription model. So that could be another way of generating some bit of revenue out of this. But this is one product. I think the basics need to be right. I think that's the core. I don't think too many revenue lines is what is maybe a dire need at this stage. One needs to accept that these changes are bound to happen.
Got it. So you're saying revenue is almost a reality in terms of how that will play out. It's the costs where you would bring in efficiencies in terms of systems, onboarding costs, NPAs, etc. Ritesh, does it operate similarly in Nepal in terms of how the economics that we just discussed?
Yeah, just to add on to whatever Saurabh said, I think the Trump administration, I think Donald Trump has already made a verbal commitment to cap the credit card interest rate. So if that happens, that'll definitely have a big impact on how banks and fintech companies need to review their entire revenue and cost model. So in terms of talking about Nepal, since I already mentioned that we don't have much visibility in terms of the visibility and penetration in terms of the credit card business, I think yes, I will have to be mindful and then take recalibrated actions to strike a trade-off between whatever business we currently hold in terms of the entire card products vis-a-vis scaling up our mobile banking business, because that's wherein we see a lot of opportunities going forward. So having recognized that, Global IME Bank is recognized mobile phones as the cornerstone of our retail digital banking strategy. So we're not very bullish on cards business as of this moment, because I think the penetration in terms of mobile phones availed by the Nepalese citizen, and in terms of the broadband penetration, always it's on a better side. So
got it.
We foresee mobile being the cornerstone of our retail digital business going forward.
Got it. Hari, you mentioned something earlier which kind of connects with this, that is there a need for multiple cards in the wallet? And we've all seen this of every credit card trying to be the top of wallet card. And this concept has remained forever and will remain forever. But do you think today, and I see almost every user carrying 5 credit cards for different needs. So one is a vertical specific credit card, second is a universal credit card, which everybody which naturally claims the top of wallet. Where are you seeing this going? Is the spend diversifying in a user's wallet across cards, or is it kind of concentrating towards a few cards?
So there are 2 parts to it. One is in terms of convergence. Convergence is happening in the form factor clearly. So the more convenient the form factor is to the customer is where the convergence will happen. So let's assume that with increase of a limit from say 2,000 to 5,000 for a tap and pay transaction to it, the more transactions moving into tap and pay, it is not eating into another type of transaction, but it is only increasing or widening the transaction. So the second aspect to that is that Really the form factor is not creating a divide, it is widening the entire ambit of the transactions that used to happen in an otherwise mechanism through cash, non-cash model. Right? So the way we see it is that, yes, from a customer convenience point of view, the top of the mind share, when we rethink about it, why would I use a separate card for my education payment versus I would do for a travel versus this? You would continue using your card, you would get the best of what the customer expects in terms of rewards or managing the rewards. How can we make that more simpler? That's been our thinking. If we actually look at it on rewards more than earning, how easier and how convenient can the customer redeem the rewards is the real thinking that we would want to put behind it. So that part of the experience is what then moves the customer towards product which is more convenient rather than looking at multiplicity of options.
Got it. And it makes sense from a reward optimization perspective. That is what would lead customers use a card for rewards and not so much for credit, at least most of the customers. And so it makes sense. We may be just about time, so I'm going to just quickly. So we will probably go to the last part of this conversation in terms of, and this is the favorite part because it kind of is more imagination and not so much limited by customer, regulatory, etc. But if you could take each of the panelists, if you could take a T+10-year view, and we've been talking so much about biometric payments, voice payments, gesture-based payments, a lot of that has been there. Where do you think payments and credit intersection will happen, and what is the wildest idea that you think could work in terms of customers, fintechs innovating with banks to create such a product? Where is the ideal form factor 10 years down the line? What would it look like? We can start with anybody.
Yes, I'm not sure that there's an ideal form factor, so it's a evolving space. First of all, I personally feel that India as a country on the payment space is fairly evolved. I think we are ahead of many developed countries, that's for sure. I'm not sure which form factor eventually it will take, but the factors that will kind of decide is there are a couple of themes you can say, or there are a couple of factors. Like one obviously is the authorization experience. I think that's very important aspect. Second is the convenience part, which we have already spoken, so that will continue. As long as it is frictionless, customers will kind of adopt payment products more often than not. Then the third is how the fraud is managed, because in digital world, fraud is becoming a pain now. So how well a payment instrument is managing that. Today, if I have to take again UPI as example, everything is fine. Maybe it kind of checks all the other boxes. But even if in case of dispute today, still the dispute management is not up to the mark, is my personal take. So these are the things which will kind of define that, how the market will shape. Then there are other tuck-ins like maybe you'll have variables, or maybe you'll have voice payments, and those are the things which are like more like a evolving form. But if you have to look at the core of how the payment ecosystem will evolve, I feel that these are the factors that will decide.
Got it. Ritesh and Hari, very quickly, 60-second view on what innovation looks like 10 years down the line.
So 10 years down the line, if you talk about our financial market, our central bank is on the verge of granting licenses to the digital fintech companies. So I see a lot of fintech companies getting their license and perhaps offering banking service in a much more efficient and effective manner. And banks are also getting into that competition. So at least at the foreseeable future, 10 years down the line, I see that.
Got it. Hari?
Yeah, I think I would still put my bet on mobile. Mobile is the form factor that will stand the test for now. Yes, new form factors will evolve, wearables and voice and others. But mobile, to me, seems to be the point of convergence, both from the issuance as well as the acquisition point of view. Okay. It's going to be on mobile.
Great. Thank you so much, panelists, for a very wonderful discussion. Please give a big round of applause for all the panelists. Thank you again. And thank you, audience.
Thank you so much. Well, I must say that was some wide range of perspectives when it comes to redefining credit cards in the age of seamless payments. Thank you one more time. With that, may I please invite on stage Mr. Deepak Sai, Senior Consultant at Digital Fifth, to please join us and felicitate all our speakers with a token of appreciation, beginning with Mr. Abhishek Kothari, Founder, Chief Executive Officer at Fab Money. Thank you for weaving that conversation for us. We'd like to also thank Mr. Saurabh Puri, Chief Business Officer, Credit Cards and Lending Products at Zaggle. Thank you. We'd also like to thank Mr. Ritesh, Lamichhane, Chief Digital Innovation and Transformation, Global IME Bank Limited, for sharing your insights. And of course, we'd also like to thank Mr. Hari, co-founder at OneCard. Thank you. May I request you to please come together, all our speakers together, for a group picture. Let's give a round of applause one more time. Thank you. Thank you so much.